Good day, everyone. So today is not going to be a backtesting session. It's not going to be a live trade recap, but instead is what really is the progress in our 2 years worth of backtesting data. Because currently, I've already backtested the year of 2024 and 2025. I started with the year 2025 and data 2024 as my second year. So the data might have been better because I traded better. Obviously, as you gain market experience, you understand the parameters or limits of your model. You start to actually have a higher win rate or maybe squeeze more RR and maybe try to also have a trial and error because you're trying to really get as much data, as much information as you can from your model. Like, what is the limit in terms of its take profits? Like, when does my BE rate start to go higher depending on my RR? Um, a certain RR makes my trades take a lot longer, or all of those factors are, maybe like my window starts to just slope down because at this certain RR, certain time, or certain duration the trade makes my my probability go lower. Nonetheless, let's go on our 2025 data as well as 2024 and the combined data. So this will serve as, not only a credibility in terms of, oh shit, I have these statistics, I have this data that I can rely on to and somehow trust that as I trade this model 100% of the time, I have this X number of probability that I'm winning this trade. Anyways, it's going to 2025 data. Basically, on that full time, had a total of 153 trades, 96 wins, 38 losses, 19 break evens. This indicates, my average RR on all of those wins. This one's for the A pluses, A minuses, and discretionary, and how long they take me an average to hit take profit, or at least in this case, take profit. This case, stop loss. In this case, is break evens. And I've categorized them on three categories for wins because there's A plus, S plus is wins. Like everything aligns itself. The model is really there. The narrative is there, and the delivery was also decent. But I'm not really necessarily going much of delivery. It's just really the model, the narrative is there. Because there's sometimes the delivery just sucks, but it's an A plus model. Just the market condition wasn't S plus at that time as well. For A minuses, why did it categorize it to A minuses? Basically, the model was there, the narrative was there, but maybe it wasn't as clear. My levels weren't necessarily respected right away, but I had a conviction to take the trade because it seems like an A plus setup, but I know there's some criteria that's lacking. Maybe displacement could be not highest time frame inversion, but I really had a conviction to get an entry at that point because we're either pretty bullish or pretty bearish in that day. And as for discretionary, it's just basically the model might be still there, but the timing wasn't there or some of my description the model wasn't there. It's not even an inversion. It's just a change of state, or it was an inversion without the first percentage nor the highest time frame. Basically, conviction based, but the drawn liquidity was so clear for me to not take the trade. So basically, that's the discretion I set up for me personally. As for losses, I categorize it into two, which is good losses and can be eliminated. Good losses is just really part of the system. It's part of the statistics. It's A plus setup or an A minus setup. The narrative was clear, the drawn limit was clear, but it just didn't quite work, and it is a good loss. Losing is a part of the game. There's not such a time that there's no strategy that's 100% win. It's nothing like that, guys. If somebody claims that they do have 100% win rate, it's already capped. It's already capped. So that's good losses also can be eliminated. Basically, these are type of trades that it's just really high conviction, but um the model wasn't really there, or let's say the timing wasn't really there. There are certain parts that I chose to disregard just because of the conviction. But then obviously, um, we have to remain as systematic as possible because if this type of trades can be eliminated, imagine how much your winner can just boom higher, how much your R can just boom higher and just from break even to profitable or from profitable to be extremely like profitable in that month or like really utilize that month or that year, etc. Majority of my kind eliminated actually are discretionary setups, and sometimes it's like A minuses but has no narrative, or A pluses but has no narrative. Technically, it wasn't even A plus if the narrative wasn't there, just the model was there. If that makes sense. So That's format categories for losses. For break evens, I have two, which is invalid and structural. Basically, structural is, you know, it, that certain level I went to break even is a point that my model or objective was invalidated or timing was invalidated. Like it took too long to, to just range in one place, and I'd rather just not be on that trade. So I'd rather just go and break even after X amount of minutes or X amount of time. And let's say I'm already up like 80, 90% of the trade. I don't want to be up 80, 90% already on my take profit and just go back to my stop loss. I'd rather be stopped out and break even. So that's for my break evens and no trade days. I journal, bank holidays. Obviously, bank holidays we have automatically no trade days. I think there's a high chance to just chop the whole trading day, and that's just the truth. But recently, it's not the case. But I'd rather just not trade bank holidays. Like the banks are having holidays. Why would I, as a real trader, try to trade on those days? So automatic no trade days and valid setups basically is just there's no valid setups or like A plus A minuses. Maybe there's are like really bad setups that might have worked, but I don't want to take those types of trades. So basically here on all these trades, I have 58% of the time there's no valid setups on my trading session, which is a big percent. Basically over 50% that I um show up on a trading session, I don't find any setups. So that's something to put in mind, not to look for trades, but go on a trading session that I'm not looking for a trade, but if the opportunity presents itself, I'm willing to take it. After this, suboptimals basically, it's more like discretionaries that didn't give me conviction, or maybe A minuses that really didn't have the narrative, but it still worked. But I'd rather not take those type of setups, like more B pluses, C pluses, B minuses. Uh, but but they're not chosen as it has a lower probability to deliver. Basically, they're like lower than A minuses and lower than A minuses in such a way, but also lower than discretionaries because my discretionary trades are like just the narrative is there, the drawn liquidity was there, but the model might not have been there. It's just really have a strong conviction, but this suboptimals it just didn't really get that conviction. I didn't really get the conviction that all right, these trades are tend to work. Type trades. So after 2025, I had a 71% win rate. And as for with the B win rate, is basically I accept the BE as losses because I failed to deliver expectancy. But this win rate isn't really that valuable, but I still record it. But this is, just win loss ratio, 70% win rate. And this is how much R I gained for the whole year of 2025, 58 R, which is if, we divide that in a yearly period, I'm averaging 4.83 R each month, which is not too big. If you think about it, it's not too big, but, you know, if you get consistently profitable each month with that type of R, that's pretty good enough. Like I'm up 4.83 R on the year. I mean, each month. Basically, I'm up like almost 5% each month in average. And for me, that's a pretty good strategy. But obviously, as years goes by, gonna be better, and you're gonna see it on the 2024 data. So this how much R again. This just proves that I'm have higher rate in CISD without CISD. So I don't really wait for CISDs anymore because I find CISD as more of like a psychological confirmation instead of like systematic or a strategic uh, confirmation. And I actually have more wins without CSDs, or at least without relying onto them. Just inversions with narrative, high side inversions. That's all. Not really CSD anymore. Right now, I don't really record CSDs anymore. It's just they just prove me that without CSDs, I have a higher win rate and less BE rate as well. So what is this optimized data? I only did it for my 2025 data. Basically, as stated here, we just remove discretionary trades that are, as those tends to not fulfill our most of my trading criteria. It's not an A plus or A minus. Basically, to just simplify this, optimized data is just I'm only recording A plus setups, A minuses. I converted could be avoided losses as um what do I do here? Avoid losses are just eliminated. I think yeah, we remove just those eliminated losses because technically those are not systematic losses. So I just remove them. So losses that will only be counted on the systematic data is the good losses. After break evens on the structural, but the unvalid break evens actually goes to my wins. Because usually the main valid is are wins that I could have I just could have got, but I just sucked the hell out of my expectancy just because it was a little bit more emotional. It wasn't really structural, or I just went break even too early. So as for the 2024 data, this might win rate systematic wise, but it's not really a type of win rate, that is the most accurate because it's just like basically this. My raw data is the actual data that I've taken. That's the type of trades I really took that year. And there are really days you're not going to be as sharp and not really going to be as systematic. But let's just assume you're a robot. This is really the data I could have gotten. But obviously, it's could have. It's not the reality. So for me, I always just rely on this win rate over here. And this was just like, looking at the best possible I could have gotten for that year. Also remove discretionary. When I remove discretionary, I actually had less R gain but have a higher RR. But that just basically means, discretion is really part of trading, and I do believe it is part of trading. There's gonna be type of trades that wasn't, you know, systematic, wasn't A pluses nor A minuses, A minuses, but the drawn liquidity was just so clear and you had a conviction due to your market experience and just, overall conviction that, oh shit, I've seen this shit work many, many, many times. Why wouldn't I take it? Obviously, the reason you won't take it is, it's not an A plus or A minus, but again, there are times that discretionary can be taken as long as they have the narrative in them. After 2024 data, I had a much better uh, data here since I was able to see the limitations of my model and actually just better market experience. I just became a better trader, or maybe that's also a possibility. Is just the market condition was just better in 2024. But nonetheless, this was my data. Um, I have 177 trades, 113 wins. Actually, I had a high RR in this year because I was trying to squeeze as much as RR. If you can see here, I only had what average RR was 1.18, and yeah, I jumped to 1.4. Basically, I was trying to squeeze as much RR, but as a return, I had a higher BE. Because here on 2024, I had what only 19 break evens, and here we had like times two break evens here. But our R gained a lot more. I had more wins. I had slightly more losses, but I had a much higher win rate this year. 81% win rate out of all of those trades with 87 plus R. That R is just win to loss ratio. That doesn't contribute, like, doesn't reflect the average RR here. Because if we put the average RR, I'm technically up 127 R in that year. Technically, in this back testing, but I just go with the profit loss ratio. So 87 R is just basically me having 7.25 R in average each month, which is really, really good. Like being up 7.25% on each funded account is pretty good. So I just really have to rely on statistics. I have to trust the data and always remind myself that every single time I execute my system, 100% of the time, I'm winning, what, 79 to 81% of the time. And this was systematic data. So let's go now to the actual data like combined. So this was my win rate combined on year 2025 and through 2024. I have over 75% win rate with almost um you know with like 330 trades as my sample size. And this is raw, by the way. This is not systematic. This is was the raw data. And I was up 145 R in a span of 2 years. So basically that just says every month I'm up 6%, over 6% in average, which is just gotta trust the data, guys. It's a really profitable data. I just have to execute the market, have better psychology in order to, execute this type of setup day in and day out, and just trust the statistics to play, you know, itself. And you can see here, this is my total number of trades, and these are the numbers of my no trade days. There's so much no trade days, guys. That's like what? Um, how many percent? So in every session that I face, um, 573, wait a sec. So that basically means out of every trading sessions, I assume that 42.41% of the time I will have no trades. So yeah, it just means not every day is going to be a trading day, particularly like no use Mondays. Really, really strong high in values like NSP days. They tend to just go in one direction and not really have high probability setup. So this is just more like, just transparency and as well as credibility um on the strategy I'm playing with. And basically this was the PB model, the Mech model. So I'm not owing any of the strategy. I just studied this through Pat and Blake. Shout out to you guys. You are truly the GOAT, my mentor. And yeah, just really mechanical. And really high win rate with a decent RR. And just for me personally, I'm that type of trader. I'd rather have a high win rate with lower RR rather than a really high RR with lower win rate. Just healthier for my psychology and overall mental. So that's all for today, guys. I hope you love this video. In terms of transparency, that I actually took the data from the strategy, back to this data for the past 2 years, and actually see here how profitable this strategy really is. It's just you have to execute it day in, day out, and just let the statistics play out. Like, imagine the 64 losses in the span of 2 years. That's a lot of losses, but if you think about it, that's a span of 2 years. You're having this much wins. You're up this much R. And yeah, that's pretty much it, guys. And we're also going to be trading the third year as well, which is 2023. And I hope you stay tuned on that because I want you to learn with me, understand my thought processes on every single trade. So that's all for today, guys. And I hope you love this video. I hope you find it beneficial. And if you do, please comment down below. And I want to be with y'all guys in this journey to becoming actually a funded, profitable trader. And I know this is that year. I believe it in my heart. I believe it in my mind. I'm extremely delusional. I'm extremely ambitious, and I know one day it'll work out. And to all those day ones right there, shout out to y'all, and I'll never forget y'all. That's all for today, guys. Always reminding that every single time you follow your system, you will be rewarded. Every time you disobey them, you will be punished. That's all for today's video, guys. Peace out.